Okay, so you should be live with me. We've moved into session number 12 of our two-day summit. Welcome to those of you that are just joining. My name is Simon Campbell. This is the Round the Clock Trader two-day trading summit sponsored by Nordic Funder. By the way, we're hearing from Nordic Funder again today at 3 o'clock. Michael Buchbinder is going to be joining us there, the CEO of Nordic. The link that you see on the bottom of the screen is thanks to our sponsors, Nordic Funder. They offer a slightly different set of rules for accessing a much larger pool of funds to trade with. There are all sorts of different companies offering these funded accounts and different ways. I like the people at Nordic. I've worked with them for quite a few years now, and you had an opportunity to ask questions direct to Michael at 3 p.m. today as well. So please join us for that. It can change the way that you approach trading, and it can change your risk position as well, which I think is something we're all aware of. I'm really pleased to say that our next speaker, Patrick Reid from the Adamis Principle, is coming to speak to us. It's the first time at Round the Clock Trader. I'm going to invite Patrick now to sort of share his screen. Give us a moment or two, because I know that Patrick hasn't done this with me on this platform before, so fingers crossed it should be relatively straightforward. I can see accepting and connecting, Patrick. That's great. Good to see so many of you here, by the way. Thanks for spending your time with us today.
Yeah, can you hear me?
Oh, we can hear you. Good morning.
Oh my God, I'm having technical nightmares. Hello.
Well, it seems to be working smoothly from now. Whatever you've done, you've pressed the right button, because we can see you and we can hear you, which is great. So, and it's good to see you.
Good to see you. How are you?
I'm good. I'm good. I'm really enjoying this. We actually, these things are so much more fun when there's lots of people.
Yes.
You
Yeah.
get lots of great questions, and you get things that pop up that you hadn't encountered before, and it makes the whole thing more fun for presenters and for the hosts and for everybody else as well. I think we just see that chat box down the right hand side is quite an interesting tool. It's one of the things about this platform. It's good. It's not all good on this platform, I grant you, but these things are good. The ability to watch the replays sort of almost immediately as well is also a good feature.
I just wanted to ask quickly, Simon, how do I share my screen?
Well, that's what we're coming on to. If you take your mouse and hover it above your head, all like magic, some symbols will appear.
Got it. Yeah.
And then one of them is an open laptop with a narrow share screen.
Great. Brilliant.
And it should be, will ask you to select which window you want to select, whether it's the whole screen or just a particular window. If you have two screens in front of you, it's an idea to share the screen that's got your slides and then move this platform onto another screen so you can still see the questions.
Yeah, I'm just having to. The trouble with Macs is they're very. You need to unlock a lot of the things. Give me a sec.
Okay. So who is Patrick? Massa's asking. Yeah, I'm just coming on to that. Patrick is the founder of the Adamis Principle. I'll let you explain more about what you do there, Patrick. But you've got a history in the financial markets.
Yes, absolutely. Can you see my screen?
It's not come through yet.
Okay. Try again. One sec. Apologies for this. Just trying to navigate this new thing. Here we go. Okay, now just try that. I am sharing, but it's just not coming through, which is weird.
Okay. It's
Yeah, I just 1 sec.
when you do the share, it asks you which screen to share.
Yeah, it's just got window, and then I've actually got it, but it's just not sharing it. Okay, so let's try one more thing, and then I'll just do live charts, I think. Give me 1 sec. Can you see my screen now?
Nothing's coming through. Doesn't seem to be.
Yeah, I'm just having a nightmare with this whole thing.
Okay, I have one suggestion I have. Could you quickly email me the slides to me?
Yeah, I'll
And
do it
then
now.
then I can run them maybe from here, if
Yeah,
that makes
and
sense.
then that's great. A good idea.
Yeah.
Hold on, mate. And I can just do a little. Is it? What I'm going to do is just reply to that link you sent.
That's absolutely fine. Yeah.
Okay. I've never used this software before. Is it new?
I've been using it for about a year, actually.
Yeah.
Yeah.
I've just sent that now.
Okay.
It might be because I'm on the Mac. I don't know, but I've never had this problem before.
Well, that'll be fine. While I get the slide set up, could you tell people a little bit about, I mean, 15 years experience in the markets, running a derivatives desk and Forex markets, but it's not all you do, because you do now trade obviously your own accounts, but you offer people a way to transition themselves into trading as a career as well. You mentor people into this as a career change. So could you tell people a little bit more about what the Adamis principle is?
Yeah, absolutely. Thanks, Simon, and it's great to be here. I guess in a nutshell, we help career changes, often late career changes, get jobs in as institutional traders, and we do that through my own experience. In my late 30s, I used to work at the BBC, and I I changed to become a futures contracts trader in the biggest prop desk in the world, definitely in Europe, called Tower Trading. And it's just to get all of that experience and to say, look, you can do this. It's really hard work, by the way, but you can do it. So we really get people match fit for an institutional position. We do help retail traders, but essentially, if you want it, we can get you match fit for a futures desk. And we do this through a number of products. The key reason why we're different is we offer daily mentoring. So we give you a chance to talk to an institutional trader every day. And our programs range from 3 months. We do one-to-one as well, but 3 months and 1 year. And basically, it draws upon my 15 years experience at institutional level, from futures contracts to spot effects. And the mentors that I had been in charge of bank desks in spot effects for over 35 years. And obviously I traded my own account in futures, and then traded the prop desk's money. But also, about my old boss, Adam, he's been in banking for 35 years. We set up Adamis Principle about 5.5 years ago. There you go, brilliant. And, as a result of that, I'm on the BBC. I was on ITV yesterday. Every month I'm on the BBC talking about financial markets, in various publications. And we really, we're here about how to teach you how to trade, but also how to understand deep macro as well. So we feel we're definitely macro moves markets, and it's not just about technicals. And, we're here to kind of guide you and navigate through all of those years experience. And we feel that it's a lonely job, right? It really is. But talking to somebody every morning, so this is where we've worked. I'm also visiting lecturer at University of Cambridge, teaching macroeconomics. And all of these banks, our trusted associates have worked at. So, you know, we really do have a wealth of experience on the institutional side. And that's what makes us different. And also, you know, talking to someone, running trade ideas around someone every day is something, you know, we feel we're different on. So it's just an incredible feeling to know that you can lean on somebody every day. So there's me on the BBC News. I've been in the Telegraph. I've been on Reuters as well. So if you go to the next slide, thanks, mate. And the next one. So really, you know, I was thinking about creating an edge and what I was going to bring in it, and really, there's so much I can teach, really, and with such little time, I wanted to I'd rather you guys know something really well, but only a sort of specific area, than know a lot of loads of things, sort of thing, or a little amount of loads of things. So I guess, you know, obviously, for me, it would be a good idea to get a gauge of the level of the audience. So out of 1 to 10, how would you rate yourself as a trader? Could you put in a number? Is that possible in the chat? Don't be shy. If you had to put a number, Simon, what would you be?
Oh, I would be a modest 6.
Ah, great.
Modest
That's all right. There we go.
The more
Coming in, floodgates
these things they do, the more I realize I don't know. So
that's gut. So we got 4s. We got 1s. Massa Lemasato. Sorry about the pronunciation. Shakil. Okay. Well, we'll get you up there. Bettina 5. John 3. Sterling. Okay. So 4s. We've got an 11. Dan. Right. We need to talk, mate.
I like your style.
I like you. I like you being humble there, Dan. Nice one, mate. I love it. So this is great. 6.8. We've got a real economist here, haven't we? Peter Faulkner. I love it. This is brilliant. Jean, sorry, 3. Spinal Tap. Oh, I love it. Yeah. Turn it up to 12 or whatever it is. I love it. No, it's 11. That's it. Oh, that is just such a great. You know, Spinal Tap, Dan. They have a band and they still tour apparently. It's such a great movie. Oh, I love it. Okay. Well, I don't know what happened, but I think it was when I asked you, Simon, what your score was. Then the floodgates opened. So well done. You got your magic there, Simon. Okay, so that gives me a really good idea of the level. And the thing is, right, is, you know, you've probably seen traders and educators and whoever, right? And you've probably seen YouTube and you've been on courses and all that stuff. And all I can say is, I don't really have an opinion on anyone else, in the sense that I don't watch YouTube, and I definitely don't think you should watch YouTube. That's just my personal opinion. Obviously, you know, everyone's different. I find it's very noisy and it clouds your judgment. For me, and I am always learning every day, right? For me, my experience is unique to me, and it's my journey. And I was a latecomer to trading, but I've worked very, very hard. And I started at institutional level. So I surround myself with people that know a lot more than me. And that's what I encourage all of you to do. Right. Yeah, that's it, Sterling. Agree to stay away. And you're not going to get better by watching YouTube or Instagram. You're not going to get better by watching pictures of Ferraris. It's just not going to happen. So avoid it. What I would say is I use LinkedIn, and I have about 9,000 followers. Most of them are institutional traders that work in banks, hedge funds, prop desks, asset managers. And I'm very vocal. I'm blogging every day, and I'm vocal. If you want to hook up with me on LinkedIn, I will connect, and please read my blogs. I do it every day, and it's free. So Sarah, you've just said, I wouldn't have learned anything without YouTube. However, most of what I've learned is from ICT. Okay, I don't know what ICT is, but if you could tell me what that is, Sarah. So I guess for me personally, I feel that the very heart of trading, you've just got to do your groundwork first. And before you pull the trigger, before you even try and get an edge, I would say, I don't know inner circle trading, Sarah. I mean, there's a lot of these companies around. I would say, if you're learning from something or someone, look at where they've worked. If they've been a retail trader, which is fine, but that's what you're going to get. For me, I love looking them up on LinkedIn, looking where they've worked. Has it been a banker, hedge fund, an asset manager? And then I do my due diligence, basically. So for me, the entire market revolves around dollar and risk. Now, if you work in a bank or a hedge fund, everyone talks in these terms. So it's dollar and risk. And everything really revolves around that. And also everything revolves around how debt works. So really, to create an edge, you really have to do these two things. And then the final thing is, if you really want it, I'm up for a call, and I'll tell you how to scale up, basically, if you want to take that further, basically. So yeah, I'm going to go into the presentation because otherwise I'm just running out of time. And I will reply to all your texts, by the way. Okay, so thanks a lot, and keep them coming. This is brilliant. So if we go to the next slide, this is how debt works. Thank you.
And again?
Just the next slide. Not really doing it. Basically, how debt works is, it doesn't matter how rich you are, everyone's in debt. Okay, and when that debt is presented in the market, it has a price, and usually that price is represented in a yield. So if we look at the cost of debt, it can be in yield, and that is a security. It's called a bond, and essentially somebody's going to buy that, somebody's going to sell it, and that yield can really tell you everything you need to know, right? So that is how debt works. And obviously there are certain things. Can we go to the next slide? Is that possible, Simon? Still not seems to be working. Is it working on your end?
I'm seeing a big cross. I'm imagining that some diagrams have not come through, because I'm seeing
It's slide 9 on what I've sent you.
Yeah, this one. You should be looking at I'm looking at slide 9 now.
No, it's not. Can everyone see it's how debt works? It's no, I've lost the share now. If you can just bang that up again, Simon, that'd be great. I'm happy to email the slides to you, by the way. There you go. Bingo. Can you see that now?
Yeah.
Can everyone see interest rates in the middle? If you just say in the text, that would be great. Just so I make sure. Yes, great. Thank you, Bettina. Okay, now, the way debt works is everyone needs it, right? From Warren Buffett to Jeff Bezos, right? And the reason why they need it is this. If you want to take over a company, or you need to get cash to do like an arbitrage, or you just need to fund some liquidity, you can't, if it doesn't matter how rich you are, most of that's tied up, so you can't unleash that. You can't make that liquid. So you borrow from a bank. So all the rich people borrow from banks very quickly, right? And all I would say is that has a price, right? So if that has a price, then thirdly, that price affects everything we do in life. So usually, as with the bond market, we have interest rates, and generally interest rates rise. What you'll find is yields go higher, the currency goes higher, but also borrowing costs as well. And that in turn attracts savers. So generally, this is a very basic concept on debt. When the interest rate does rise, it slows growth and inflation and hurts businesses, right? And if you flip that, the problem is if they raise interest rates too high, it can stunt growth, and we get hit a recession, which is what we're doing right now. Basically, we front loaded a load of hikes from the Fed, certainly everywhere else, because of inflation. Now we're in a situation, if you're a currency trader, you should know this. We're now in a situation where they're pausing. So the Fed is meeting next week. That is a big decision. We've got, in about 2 hours, we've got GDP coming out in the US. It's GDP advanced. Then we've got the Fed's preferred metric, which is PCE, on Friday. You need to watch this, right? The PCE is the Fed's preferred form of inflation. It watches it like a hawk. And if this moves, you can make a lot of money. So you need to know how important PCE is. And it all ties in with interest rates, and it all ties in with debt. So that price really affects everything we do. If we can understand debt, we can understand life, because it affects mortgages, it affects how much eggs cost, right? It affects oil, it affects expanding your business, it affects traders, it affects everything, right? So obviously flip that, when interest rates drop, yields drop on the currency drops too. This boosts growth and encourages borrowers. So if if your mortgage rate is going lower, or the bank says, I've just slashed it, they're not going to do that. But they're slashing interest rates. They say, yeah, you're only going to be paying 1% on your loan. You're going to borrow more, right? However, the problems occur when rates are dropped too much. This causes hyperinflation, like Zimbabwe or Venezuela. This means people, like 2008, you over leverage, you take on too much debt. So this is in a broad concept. I can send you this slide. If you just connect with me, I'll leave in my details. Simon's got my details. I'm on LinkedIn. Just say Patrick Reid, Adamis Principle on LinkedIn. Connect with me. I reply to every message, by the way. I'm very approachable. Okay, so this is, we go to the next slide. Great. So really, this is a short take on how all banks and hedge funds read markets, and they talk in two terms. They talk in dollar and risk, right? So the first thing you need to know is dollar going higher or lower, right? So next slide. And I have a little checklist, right? So all you need to do is to look at all your dollar pairs first. So if you go to the next slide, because remember, the markets are trying to tell you something. All we have to do is listen. All right, so next slide. And I'll send this to you, whoever wants it. Just connect with me on LinkedIn and I'll leave my details. So this is your checklist to get a dollar view. read from left to right, pick any dollar pair, say euro dollar. Is it above or below the moving average? Is priced more or less from the previous session? Each session is Asia, New York, London. Asia, London, New York, that order. And do that on the daily time frame, then do it on the 4 hour. Now, I don't use 1 hour, I use 4 hour, just because it cuts out a little bit of noise. And if you do that on each dollar pair, so start with euro dollar, then Aussie dollar, then dollar yen, then cable. Sorry, cable is sterling dollar, by the way. So cable is that, and then go through dollar CAD as well. If all of your dollars point in one direction, that is your dollar view. So you're either dollar firm or dollar weak, right? So if we go to the next slide. So here's a simple thing. Print this off and tick. So these are the dollars, you know, and pick a bunch like G7 or whatever. So euro dollar, if that is going higher, if cable is going higher, if dollar yen is going lower, if dollar CAD is going lower, if Kiwi dollar is going higher, that is a weaker dollar, right? Next slide. So I'm leaving, just conscious of the time, I've got 15 minutes left, but I'm leaving a good 10 to 5 minutes for Q&A, because I know there'll be a lot of Q&A. So you've got your dollar, you worked out it's dollar firm or dollar weak. At the moment, it's dollar weak. Then you've got your risk. And risk assets are a pot of very risky assets. And they include emerging markets. They include 10-year yield. They include a little bit of the yen crosses. And yeah, no problem. I'll send you that checklist. So oil and gold sometimes come into it, but it's really your choice. I would say my risk assets are S&P. So you won't find S&P on this slide, but it is in there on another slide. Yeah, dollar rand is really good because that's high risk. So usually with dollar rand or dollar MEX, they're very they're called carry. So that means that when you buy the currency, you get yield off that on the 10-year bond. So essentially, dollar rand is very, very sensitive to risk. You know, if the world blows up, I can guarantee dollar rand is going to rally. All right, next slide. So really take this moment to go away. Don't literally go away, but take a moment to go away and do your own dollar and risk view. And in 4 words, and you can walk into any bank, hedge fund, asset manager, prop desk. If you use these 4 words, one is this: dollar firm, risk off. The second one is dollar weak, risk on. These 4 words describe the entire market. Now, obviously, there's variations of those, but what you'll find is if you have that base in your dollar and risk view, you are basically, you can talk to any institutional trader. That's how we talk, right? So that is your foundation to create your edge, basically. So once you've got that in place, you can actually understand how the markets work on a global level, right? So go away and do that. Maybe not now, but when my session's over. Next slide. This works on all assets. All the hedge funds and banks use this method. That's how I got taught. You know, I haven't worked in a bank, but all of the people that I've worked with and our trusted associates have. I have worked in a hedge fund, Edgewater Markets. I've also worked in a prop desk, the biggest one in the world, basically. And when you come, I actually use it as a test. Learn your dollar and risk view, and then go to a bank. If you meet a bank trader, talk like this and see what they say. Right? And the key thing about this is the dollar and risk view is basically how market is priced, right? So this is really important. When you get a dollar and risk view, you do not include macro, right? If you don't know what macro is, it's big for Greek. And the pure macro, people talk about, throw this word macro around. Like pure macro is data, because it's the study of big data within, say, a country or a globe. Micro is the study of data within a business, so something smaller. Macro is big, right? It's Greek for big. Pure macro is the data of a country. So if US macro is GDP, CPI, jobs, wages, right? And there's a loads of other stuff, but though that's the engine for US macro, right? There's all kinds of data, soft data, hard data, survey data, all of that stuff. But at the end of the day, it's all data, right? Now, macro today has been broadened to include geopolitics, to include central bank policy, to include, risk events, right? So just bear that in mind. But the actual pure data, the pure macro is data, just to let you know. And we have purposefully forgotten to include that right here, right now, because it doesn't matter. Don't want to cloud your price action judgment and your market view in dollar and risk terms with macro, right? Get your dollar view first, get my words out, get your dollar and risk view first, then does your macro support it? That's how you do it, right? So I just want to kind of really get that across and sort of say, look, it's really, really good, solid grounding. And what I also want to say is, when you have your dollar and risk view and it's completely rock solid, link up with me on LinkedIn and start telling me what that is. And I will personally, for free, I'll give you a brutal and honest take of that view, right? And start connecting with my connections on LinkedIn. They're all mostly institutionals, and that will raise your game as a trader. I mean, most of you are retail, I'm guessing, right? So all of that will raise your game big time, right? So it'll take you to another level of trading. So there's my offer for you. I've got another special offer as well, is that if you go to the next slide. So I want to just touch on scaling up and this idea of stats. And I come from it. Yeah, I'm going to put my LinkedIn account in there. Thank you. And then I'm going to go to the Q&A because I feel there's a lot of Q&A in there already. So if you just bear with me, I'm going to send you my LinkedIn link.
You can't click on these links from the slides.
Great. That's my LinkedIn. So please do connect. Thank you. And my Calendly link is there, so you can book a free session in Discovery Call. No problem, Marcena. What I would say, link up with me on LinkedIn, obviously, because I blog a lot and I talk about markets and and all that stuff. And look at my followers, right? Look at what they do and look at my interaction with my followers because they're peer to peer, and that will raise your game. Understanding macro and trading at institutional level, right? Great, thanks, Ash. No problem. So what I want to talk about now is scaling up. Win-loss ratios, like, you're not going to like what this is, but it's the truth. I'm telling you the truth. I'm not trying to sell you a course or anything. I'm just telling you the truth. Obviously, we mentor people, but win-loss ratios are 50-50. The chances of you winning or losing are 50-50. If you flip a digital coin random on Google, just Google it, it will be 50-50. Now, that doesn't mean you will get 9 heads. It doesn't mean you won't get 9 heads and 9 tails on the trot. But over 200-300 times, it will be 50-50. Trading is exactly the same. Now, if you have a high win-loss ratio, great. Happy days, right? Mine's 50%. Don't rely on a high win-loss ratio. If your win-loss ratio is around 70%, you're probably scalping, which is I used to do it in futures. You're never going to win money long term, right? So you don't rely on the win-loss ratio. You rely on risk reward. My risk reward's 3-1 on average. You rely on appropriate sizing on your risk reward. That's how you make money. So you catch the move and then you go big on that big move, right? So that's the kind of framework to scale up. And what I would say, this is how institutionals do it. You read reports about Citadel earning 16 billion. DE Shaw, I know two guys at DE Shaw. I met at a party through a friend, and they're number second biggest hedge fund in earnings this year. Citadel, DE Shaw, Renaissance, right? You know all about Jim Simmons, right? They're all maths quants, right? Then you've got your Rockus, then you've got your Brevin Howard, then you've got your Tudor. Where I worked at in Tower Trading, two guys went to Tudor trading futures, Bund, German debt. So that's the kind of connection. So all I will say is these guys say the same thing, all right? One thing I'll say is scaling up, you always try and look at it. It's something, so don't rely on a big win-loss ratio, rely on risk reward, right? Then at every opportunity you can get, if you can, and you're not going to blow your margin, scale up. And what that means is one of the things I want to say, which is a bit of a teaser for the full scale up knowledge, which you get when you book a call, is this. If you're trading a level or a trend line, whatever it is, and you know if you back tested it and you know that level, often if it's a fib, mid Bollinger Band, it's a trend line, whatever it is, if you know that it very rarely breaks more than 10 pips, say, and your stop is default is 25 pips, say, right? What you can do is you half your stop but double your size. So it's the same risk, but you're scaling up. Now, if you lose, it's okay. You've just lost the same amount, right? But if you win, what you do is you create exponential upside. You're opening yourself to upside, massive upside. And you only do that once a month, right? And this is how I do, because basically you're not then relying on win-loss, which you shouldn't be doing. You need to be putting yourself in a position of going, look, here you go. I'm here, I'm available, I'm open, and I'm going to scale this. So there's other things where if you have a really good month, you get that a month and put it on one trade. I'm not saying just throw it on a trade. Do all of your confluence, do your macro, do your technicals, do everything you need to do. Don't just throw away that money. But then those are the trades that will set you on a huge catapult higher. Then your base clip size just goes up a notch, right? And then you have, when you're scaling up, which I'll talk to you more when you book a call, when you're scaling up, do it in stages. It's like a ruler. So you go say you're scaling, say you're doing, say 10 lots and you want to scale to 50 lots, or say 1 million, and you want to scale to like, 5 million. It's like you go 3 steps forward, 2 steps back, 4 steps forward, 3 steps back. You don't just go from 5 to 10 to 20. You're going to get killed doing that, because the markets are like the weather, right? Unpredictable. You just don't know. Look at dollars chopping around. It's like chowder at the moment. Yeah, it's offered. Yeah, it's weak, but it's still chopping up, right? So I just thought I'd leave it on that and say, look, you've got my LinkedIn request. Here, you've got my Calendly link. If you want to book a discovery call about how we place people in prop desks, looking at our mentoring plans, it's all budgets. But one other thing I will say is what we do, we don't really choose to work with everyone, because we have a very close-knit family at the Adamis Principle, and we love our job inside out. I mean, I live and breathe markets, both macro, technical, and risk. So please do book a call if you want to know about the scaling up in more depth. And what I'm going to try and do now is, we've got like just a few minutes, say 5-10 minutes, don't want to overrun, for any questions. And I don't know how you want to do it, Simon, but we've had a lot of chat and questions in the chat. Should we go back from the beginning, or how do you want to do it?
Yeah, that would be great. I haven't seen the questions because I've been sharing this screen, but if I could just rewind a little bit. ICT, I know you already addressed that, and Jean, Sarah. I'm just going through. Yes, put your account on LinkedIn. Can you see these questions, Adam?
Yeah, I've got. I'm just scrolling up myself.
Patrick, sorry, it's the Adamis Principle. I'm calling you Adam. Okay, so Ash, yeah, okay, so you put a call, which is great. What platform is best for retail for Forex trading?
Yeah, so there's quite a few. Forex Live is pretty good. It's a kind of hybrid between institutional and retail. Forex Live. Forex Factory is good for events. So you bang up your Forex Factory, you see all your big events. Obviously, we had the Bank of Canada yesterday, and also with the central banks, bang up their own website as well. The Federal Reserve, don't get too scared when you take that up. It's a lot, but it's a gold mine, right? So yeah, Forex Live, Forex Factory. My blog, of course, and also Trading Economics. That's a pretty good one as well. You can't really go wrong with those three. Cool.
Great. Sterling's asking, do you also mentor in commodities, oil and gas, and metals?
Yeah, we do. I've traded oil WTI futures, and I've traded Brent crude, and in futures. So we do definitely mentor all assets. I've traded all assets. Our focus really is FX. But if you want, my phone's going. If you want, and you've got a specific need, we can definitely sort you out. No problem.
Peter's saying the problem I found with it, you must be referring to Forex Live or one of these companies, with being unregulated, you end up trading the platform, not the market. Right. Okay, so that's one of the, with the creating their own market, you're not necessarily trading the underlying market there.
I'm not sure what that question means. Forex Live is just a news broadcast feed. It's not a trading platform.
Yeah, Peter, I think maybe you're talking about a broker CFD provider, perhaps. Maybe that's what you're referring to. Sharon says trading economics and globalrates.com. Oh, these are a couple of good sites that maybe you're suggesting.
Yeah,
that's great.
Good shout, Sharon.
Again, the kids asking about any broker recommendations for FX.
No, as a rule, like if you're any educators, if they say only go for this broker, I'd question that. Obviously, it's I know the Nordic guys are brilliant. I love those guys to bits. And obviously,
you met that. Nordic and Michael and things, have you? Of course, you met them in London at the show.
Yeah. I actually met Arif in Dubai, so I think they're amazing. By the way, just for the record, people come to me personally. Obviously, I'll mention people we know, but just look around, do your own research. There are people out there. So yeah, but the Nordic guys are great.
Jean says, in your view, is it best to trade futures or CFDs?
If you trade futures, you've got to pay for it. So that's institutional. CFDs are a mirror of spot. So stick with CFDs until you get your legs. Then you can get a desk. If you want a desk, give me a shout. We've got connections with all the big prop desks, but you need to be really a professional trader to do that. So because You know, you've got desk fees with the ladders. You've got desk fees with DMA. You've got desk fees with you get direct plug into the exchanges. So you know it costs money.
Massa asking, what is your take on spread betting?
I don't do it. It's just for retail. It's not for me. I mean, I don't. If you want to be a serious trader, I wouldn't. You know, spread betting is just a bit of fun, really, for a full-time employee somewhere else.
Is it the leverage? Is it the sort of the leverage idea of it that you think is something people should be cautious about?
Yeah, I mean, there's that, but it's also like, well, you know, why don't you just trade as close as you can to the real trading setup? Spread betting is just not really pounds per point. It's just not really akin to that. It's just mom and pop kind of do it, but it's not like, you know, pips and you know, lots or CFDs.
The kid says, doesn't it negate tax? That is one of the big features of it. The kid.
Yeah. Well, true, but there's always tax efficiencies you can make in other ways. So that's probably worth a DM to me.
How relevant, asks Paul, is your mentoring for a retail trader? Well, very.
Yeah, very relevant actually, because I upskill you. You know, if you don't come to me if you want a retail product, but come to me if you want to step up. Come to me if you want a seat in with the big boys. Come to me if you want that institutional grade education and mentoring. Don't come to me. I mean, go to YouTube if you want a retail thing. That's what I'll say. You know, it's the more you know me, say on LinkedIn, the more you'll realize that how involved I am. You know, I'm always talking about, I'm always looking at dollar and risk, and that's how I do it. So yeah.
And how much you enjoy a good breakfast.
Yeah. Exactly.
You get my mouth watering some mornings with you. Pictures of great pancakes and maple syrup, my favourite.
Oh yeah.
Limakatsu, I hope I'm pronouncing your name correctly. Is your mentoring free? Well, Patrick, I mean, I know you give a lot of your time.
Yeah, no, it's not. If it was free, why wouldn't I just go on YouTube? No, it's based on 15 years experience, and also the people that mentored me have 35 years experience. I'm not going to give that away for free. It's yeah, it has a price.
Of course. But what is free is to book a call with you and have a 20-25 minute chat.
Exactly. Yeah, that is free.
And you will help guide people to say, well, this is going to be for you, or maybe it's not the sort of thing you need. So use that Calendly link. Let me post that again because it's got quite far back up the.
Right.
Here it is.
I mean, I just want to be sort of clear on this. It's probably, I don't know if this is going to irk some people or whatever, but I'm not for everyone. This is, you know, I don't really need to work with anyone, and the people I choose to work with, it's almost like it's a partnership and an interview. And you know, we have a small group, a small family of around 15 traders that I know implicitly well. We're global, we travel, we take our clients out to lunch, you know, we get to know them. Simon, I've known you for a while, you know what I'm about. And, you know, we don't sugarcoat it. And you need to be, you need to step
I mean,
up.
Patrick, you're a good example of what this event's all about. This is what I try and do with Round the Clock Trader, because if you talk about YouTube and the guys that rent the Ferrari for the day to take the picture to put on, so you know, there's that whole side of this trading industry which it doesn't do anybody any favors, and people lose money and follow. You get the wrong idea and all the rest of it. What we're trying to do with Round the Clock Trader is we're presenting lots of people to you with lots of different ideas, and with only my nose really to guide you to say that these are people that I know from working in the business, that they've come from, you know, working in life or working in the metals exchange, working on the desk of the investment banks. They're real people with genuine strategies, and they they can trade funds professionally in many cases. And I just try and steer you towards these good guys, because there are good guys out there that enjoy helping other people trade and getting a leg up in the markets, and that's exactly what Patrick is, because I've followed you for a long time on LinkedIn. We've got lots of mutual contacts as well, and that's why I'm very happy to say, please go ahead and set up a call with Patrick. It's not going to rebound on me, which is the thing. So, and again, look, all the speakers today: Charlie Burton, Zahir coming up, Adam Harris, Ian Fawcett, all fantastic people that I've known for years. That they're not going to take your money and disappear. They genuinely do want to help, and they generally do quite well on their own as well. Shaquille, oh, sorry. I'm going to Tamuno Buomi. I hope I'm close. Trading news has been difficult. How do you tie news to a currency pair you trade? That's a good question. Does the news? Are you a news trader, Patrick, or much more technical?
Yeah, when I was trading futures, I used to always trade the data. So UK and US was my bread and butter. When a news article gets released and it's like not expected, I'll just usually I have a Squawk service which I really recommend. I can advise you on some. I know Harry at Live Squawk. That Harry at Live Squawk is basically in most of the prop desks in futures. So yeah, I mean, I'm pretty comfortable with trading most news. Now, take data. Always have a data plan. And actually, if you want, I can show you, and I'll do that on the call as well, how I trade data. So you have your expectation versus actual. You have a range. You have a pair. You have your sizing and all that stuff. And I've got some templates I'll give away free as well. So basically, yeah, but know your data, right? Have a database. You've got GDP coming up very shortly. I pretty much, because I've been doing this for 15 years, I pretty much know what the markets, each currency pair will do based on what is the actual. Again, PCE, huge Fed, the Fed's preferred metric. I know that's above and beyond GDP because it's more important. It's actually PCE is more important than CPI, for example. So yeah, I'm pretty comfortable with US data, but it's just practice.
Jean's asking about prop firms funding futures traders. What do you think of this model?
Okay, so FTMO and all of these funders, that's for a certain type of person. If one of my clients is actually a competition winner from a while ago. So it's great in a sense that it gives people a chance to maybe don't have that chance. But for a real prop desk, I mean a futures desk, it's a different setup. You see institutional, you pay a desk fee, the size you trade is a lot bigger. So probably a DM to me via LinkedIn. We can talk more about that.
Great. Seeing Colbert for Monday, Patrick. Looking forward to it, and that's great. Sterling says every YouTube video ends with a like and subscribe. Yeah. Good point. Thanks for providing quality. You're most welcome, the kid. Prop firms, Jean, yes, you always like a video that adds capils. Yeah, you like a video that adds value. That's the least we can do. That's the social democracy in action. Absolutely. Fantastic. Now, is there a couple of questions on this other question board? How much is your price? That's right. And also, Shaquille is asking questions about fees as well. Could you share anything about price, or is that something you get into on the calls?
Yeah, so our products range from 3,000 to 9,800. So our 1 year absolute mentoring program is 9,800. So that includes online, live with me, and you're able to talk to me every day. So Our 3-month foundation is 2,997. We do 1-to-1, which is £395 an hour, minimum 2-hour booking. Pretty transparent about the cost. So it's, as I say, it's not for everyone, but it's absolute institutional education and daily access to me. So you pay for that. You pay for the experience, basically.
Yeah, everything's got to be relative. Thank you, Sterling. I'm from Detroit, and if I like it, I like it. If I don't, I don't. Absolutely, great stuff. Fantastic, Tina. Okay, fantastic. So, Patrick, thank you very much. I'm sorry about the screen share option. There's clearly a few sniggles with this platform, but we're getting through it.
We got that. Thanks, mate.
That affected you. Great to have you here with us, everyone. There's a replay of this available on this link as well. If you want to catch up, go through some of the points that Patrick was making earlier. Again, these links will remain live on this chat. If you come back into the watch the replay, all these links are still there and they're still live. Or last resort, just email myself. I will forward your details to Patrick. Thank you very much for joining us, Patrick. I'm going to take the reins back now, let you get on with your day.
Thank you so much.
And we will take a 5-minute break before we come back with Charlie Burton. Thank you.
All the best.
Lots of great feedback here. Thank you very much indeed, everyone.
Take care now. Bye.